Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a report from Cyber App Solutions, and let me tell you, it's a bit like finding a $20 bill in an old coat, but the coat has a few holes. Let's see what we can find. We are looking at a Form 8K report filed on March 12, 2025, which is basically a snapshot of important events that the company wants investors to know about quickly. The most important event in this report is that Cyber App Solutions made a deal to borrow money. They entered a loan agreement, a formal agreement to borrow money with an investor who they call the lender. The amount they borrowed is $150,000. Now, the loan isn't just free money. There are rules for when and how Cyber App Solutions needs to pay it back. They need to pay back the amount they borrowed relatively quickly. If the company's stock gets listed, meaning offered for trading on a major stock exchange, they have to pay back the loan within 2 weeks of that happening. But if the stock doesn't get listed, they have until March of 2026 to pay it back. Also, the amount they owe grows because they have to pay interest. The loan comes with a 20% annual interest rate. Think of it like this. For every $100 they borrowed, they owe an extra $20 each year until it's paid back. That's a pretty high interest rate. Here's where it gets interesting. The lender has the option to turn the amount Cyber App Solutions owes them into company stock at a price of $3 Arients per share. So instead of getting their money back, the lender could choose to become a shareholder owning a part of the company. This could dilute the value of existing shares because it increases the number of shares available. To make the deal even sweeter for the lender, Cyber App Solutions gave them 60,000 shares of stock right away just for agreeing to lend them the money. This is something the report calls the commitment shares. The agreement has standard promises and rules for both sides. It has standard things that would allow the lender to demand immediate payment if Cyber App Solutions breaks the rules. This part of the report just points back to the earlier section about the loan. It's basically saying, hey, remember that loan we just talked about? It counts as the company taking on a direct financial obligation. Again, this section goes back to the earlier part of the report, specifically about those commitment shares. The company is saying that they didn't register these shares with the Securities and Exchange Commission because they believe they qualify for an exception now. Let's zoom out and look at the big picture. Cyber App Solutions has taken on a loan with a very high interest rate. This suggests they may have had trouble getting money from more traditional sources like a bank. The lender gets some pretty sweet deals like the ability to convert the loan to stock and the 60,000 shares up front. This suggests that they have a lot of leverage, meaning they can greatly influence Cyber App Solutions. The company is hoping to get its stock listed on a major exchange. That would allow them to pay back the loan quickly. But if that doesn't happen, they're stuck with that 20% interest rate for a while. The conversion option could be good or bad for existing shareholders. If the lender converts the loan into stock, it could dilute the value of existing shares. But it could also be a sign that the lender believes in the company's future. Overall, this report suggests that Cyber App Solutions is in a bit of a risky situation. They need the money and they're willing to pay a high price to get it. Whether this pays off in the end remains to be seen. Thanks for watching. If you enjoyed this corporate deep dive, please like, comment and subscribe for more insightful analyses.